always opportunities within there as well. This is why some defense and, kind of diversification has been so important heading into this year. Afternoon, this week, we get jobs and inflation during another pretty bumpy week. So we'll kind of cover what's going on in general as well. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise along the way. And again, hopefully these updates are helpful lately because I know there's been a lot going on over the past few weeks or so. So we're going to wrap up today with just a general question on kind of market updates, what's going on and what to kind of watch ahead. But before we get to that, I do want to cover some data that's come in over the last 7 days. So as we broke last Thursday, we were in kind of the midst of jobs week. So I do want to cover the jobs report that we got on Friday going into the weekend. On Friday, the jobs report came out showing that we added 151,000 jobs in February, which was below expectations. But I will share it was much closer to those expectations than the ADP employment report number that we had received earlier in that week. That number, you might remember if you had watched the update last week, was extremely low. And again, take the ADP employment report number with a bit of a grain of salt. I guess take both of them with a bit of a grain of salt. If I'm being honest, they've both been revised and there's certainly some inaccuracies, but either way, the jobs report that came out on Friday showed a much healthier, jobs addition, although still some pause for concern for sure. And then this week, we also had inflation data come out. So we had CPI and PPI numbers come out. CPI came out yesterday on Wednesday. And basically what we saw there is the headline number was up 0.2%. And the core CPI number was up 0.2% as well. So this was good to see after an extremely high number last month. But keep in mind, the important thing to watch here is the trend. So just like last month when we had shared, don't worry too much about 1 month's data point. I would say the same on this month as well with a lower one. The key is to watch kind of what's going on over the longer term and how that inflation trend is progressing. We also had producer price index come out today, and the PPI number was actually, the headline was actually flat, and then the core number was up 0.2%. So I'll share the same sentiment around that as the CPI data, but what this puts us at in terms of year over year numbers for core CPI, this means year over year, we're at about 3.1%, and core PPI year over year at about 3.3%. So, obviously this has been kind of where we've been living for a while and obviously not near the 2% target. So we will, we'll wait and see what the Fed shares coming up, because as a tip of the cards coming up next week, we have a couple of things. Number one, consumer sentiment, retail sales, but then we also have the Fed decision next Wednesday. So given all of the craziness on inflation, on jobs, and the markets, it will be really interesting to hear what the Fed has to say. You may remember last week I had mentioned that now there's some bets that really the Fed is going to decrease rates again sooner than later. Again, I think that might be a little far-fetched still, but next week will be very interesting to see what Fed Chair Powell has to say. Before we break for the week, though, I do want to touch on just a general market update. Great question of the week, just on what is going on and what's kind of happening maybe in between the lines, because I think in general, markets have been a little volatile here as of late over the last 3-4 weeks or so. Keep in mind, we had a great start to the year. So with this, we have had a pullback and we're slightly below where we started the year, but it's not as big as it may seem on the surface of a decrease. Still relevant and still important to watch. But I think that the pace of this is what's really gotten a lot of attention, as well as how it's really affected some of the bigger companies. And that's what I really wanted to focus on today. Is keep in mind, for those who tune in pretty frequently, you've heard me say this time and time again, but the way that like the S&P, for instance, is weighted is it's market cap weighted, meaning the largest companies make up the biggest percentage of that index or of that, that market, so to speak. That said, there are 493 other companies that are very large as well, just not as large as those big 7 that have done so well lately. And what's happened is that those 7 companies have really had a bit of a harder time. So it's brought the entire index down, because if those companies make up roughly 25 or more % of the index, when those do poorly, it will bring the whole index down, even if the other ones are doing okay. Similarly, it can bring the index up if the other ones are dragging because of how much that weighting really means to that broader index. So the reason I'm highlighting that is because if you tune into the TV, you might see some, quick drops and some concerns around the markets as a whole. And not to be confused, there are some challenges for sure, and possibly some opportunities in what's going on. But just keep in mind there are always opportunities within there as well. This is why some defense and kind of diversification has been so important heading into this year, is because just those names are not the entire market. And it may feel that way when we see the news, turn on the news and see the S&P and what the pricing means. But with a more strategic allocation, it's not necessarily the same degree of volatility as you might see on the news. So hopefully that helps a little bit. I think, what's going on is obviously a lot of uncertainty over the last few weeks with all kinds of, different political, agendas and, executive orders and all this uncertainty. Anytime we have that, and especially in the kind of scenario we're in right now, that breeds volatility. And so that's really what we're seeing is when the market is not sure what to expect, we get a lot of volatility. It's exactly what's kind of been going on lately. And time will tell as this kind of continues on where we go from here. But the thing I wanted to highlight is, again, just keep in mind the index is very skewed towards a few names, and there are opportunities in these markets as well. And so that's where that proper diversification can be so important. So hopefully that's helpful. Be sure to tune in next week. Again, we have consumer sentiment and retail sales, but we'll also cover the Fed decision next Wednesday, as well as the press conference and what came out of that. In the meantime, have a great weekend, and we'll see you next Thursday at 3.